Welcome to Illuminati Silver's Inner Sanctum, where we tell you the truth about silver, precious metals, economics and politics. Today is Monday the 11th of February 2019, and we are highlighting an article in the Sunday Times newspaper yesterday written by Baroness Wheatcroft, a director of St James's Place, a prominent UK FTSE 100 wealth management and financial advisory company, and is also a director of Fiat Chrysler motor cars. We shall read the article and then briefly discuss it. Cryptocurrencies, a bubble that's just taking its time to burst, by Baroness Wheatcroft in the Sunday Times Enterprise section, February 10th, 2019. Quote, "Forgotten password? Too often I have had to admit to such a failing, but by answering a few basic questions, the situation has been salvaged. This is not the case for those who had been doing business with Quadrica CX. For it seems that the password to unlock £145 million lodged with Canada's largest cryptocurrency exchange was known to just one individual, and when he died last December, he took it with him." The company's website says plaintively that it is trying to locate our very significant cryptocurrency reserves held in cold wallets. But unfortunately, these efforts have not been successful. It seems that Gerald Cotton, the 30-year-old founder of Quadrica CX, locked up his customers' assets and with his death threw away the key. While the owners of the cryptocurrencies lodged in those virtual wallets are understandably aggrieved, who can say how much they have lost? The cryptocurrency phenomenon peaked more than a year ago, yet there are still people trying to build businesses on it, and punters prepared to help them. And they are punters. Hence, a Google search for cryptocurrency brings up a host of sites offering the chance to gamble on these digital currencies via contracts for difference and the like. People will gamble on anything. The speed with which raindrops will move on a window, or the chances of a century being scored in the next test match. So perhaps it's not surprising that cryptocurrencies have attracted gamblers. But why should the rest of us take these things seriously? The government has had one task force on crypto assets reporting last autumn, and has promised another this year to explore how to regulate them in the meantime. It states categorically that the task force, quotes, "recognises the substantial potential risks to consumers and markets posed by investments and trading in exchange tokens," unquote. Quite. So why are so many still taking the risk? The person calling himself Satoshi Nakamoto came up with a wonderful idea when he constructed Bitcoin. From a price of 30 cents in 2011, it peaked at $19,783 in December 2017, but now it's down to $3,400, and Nakamoto is nowhere to be seen. He came up with a wonderfully elaborate ruse that would enable people to, quote, "mine," unquote, bitcoins at a limited rate until there were 21 million. People bought his vision, but they weren't buying anything else. It is true that established currencies have little real underpinning. Gold has been sold and devaluation is always possible. But a Bitcoin is a figment of a collective belief, and when that belief founders, there is nothing left. Yet there are still cryptocurrencies being launched, apparently more than 2,000 last year. Some investment banks have ruled out doing any more initial coin offerings, perhaps realizing that this takes them into the realm of snake oil salesmen. Others can't resist the fees. Eric Posner, a professor of law at the University of Chicago, has described the cryptocurrency phenomenon as, quote, a collective delusion, unquote. Yet the authorities such as the Bank of England continue to take these illusory coins seriously. It is reminiscent of the dot-com boom 20 years ago. Investors were desperate to get aboard. Companies were being valued on the number of clicks on their site. Very shortly afterwards, it became apparent that putting a value on a click was completely mad. It did not translate into revenue. The new businesses that had attracted sky-high valuations on the basis of what were no more than expressions of the slightest interest were stock market darlings, briefly, until it was realized that interest might not translate into purchase. Lastminute.com, which had a better business model than most of those that came to the market at this time, managed to float its shares to such an enthusiastic market that the capitalization hit nearly £800 million on the first day. Its revenue for the previous quarter was just £409,000, but hope was sky high. The dot-com bubble burst in 2000 and wiped out a vast amount of paper wealth. The cryptocurrency bubble is ebbing more slowly, in part because the currency has been inextricably linked with blockchain technology. Blockchain, with its ability to lessen dependency on conventional banks, has an obvious appeal. Every company should look at how to harness the power of technology to ease the payment systems and cut costs. But do not be lured into believing that cryptocurrencies are an essential part of the project. Bitcoins can still be mined. But would you really want them in your wallet? Baroness Wheatcroft quite rightly points out that approximately 2,000 cryptocurrencies were launched last year alone. So how does this mark the demise of the new currency innovation? Well, one does not have to look far to realize, and as we pointed out in our video entitled Cryptocurrency Lessons and its Legal Recognition and Control, that the largest crypto exchange run in Canada was controlled solely by one man, and Wheatcroft reiterates this in her article. It stretches credulity that so many of the general public have little confidence in their own fiat currencies, which are controlled by governments and banks that have been around for decades, and in some cases centuries, and yet are willing to entrust their hard-earned fiat dollars, pounds or euros in the hands of one man whom they do not know and his laptop. It's almost something one should write a book about. So last year, some 2,000 cryptocurrencies were launched. How many kids in a bedroom have created these, one asks. Are you or us going to go out and hand them our cash? We sincerely hope not. However, that said, regulators are looking at this technology which underpins these cryptocurrencies, what is commonly referred to as blockchain technology. Now that in itself may have more of a future, and may be the basis upon which a future new world currency will be created. Whilst Bitcoin and one or two others may have a future short term, we sincerely believe that their days are numbered. Regulators and central banks and governments will simply not allow a non-official entity to control the world's finances, and they simply won't hand over their sovereignty in this area without a battle. For those of us who may be gold and silver bugs, stackers or collectors, this is more positive than negative, as many an advisor will admit that the financial commitment towards Bitcoin these past few years were at least partially at the expense of investing in gold and silver assets. The question we now have to ask is, with their demise, will those investors return to our favourite commodity? What do you think? Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.